Michael Saylor's basically said, he'll never sell Bitcoin. He's kind of like the Warren Buffett, being like buy and hold, because he sees Bitcoin as the asset for the future and so forth. But then there was data coming out from Arkham, which is like a on-chain analytics firm.
Yep, those guys.
That were basically speculating that they'd sold like 70,000 Bitcoin, which is like a small portion of their Bitcoin, but it just is contrary to the fact that he said like we'll never sell. He basically came out on Twitter and said that was fake news, and he doesn't know where that came from.
Must be AI.
Must be AI, yeah. And then later, actually within the last sort of 24 hours, their strategy came out and said they'd purchased another 8,000 Bitcoin.
Yeah.
So adding to their stack. And their cost basis for all the Bitcoin they own is still at $74,000 USD. So, we're at about 91,000 USD. So there's still a fair margin for that. Obviously, if we come down to 85, it might get a bit more concerning, but they're still in the green.
Yeah, they're definitely being poked at a lot on social media. Their stock price is down 51% in the last 6 months. It got as high as about, I think, $450 a share. It's now down to $195. So I think there's quite a bit of flack being thrown at strategy right now. So I'm sure they're fanning quite a few fires.
Well, there's a lot of concern around, like strategy unraveling and then consequently unraveling the crypto market.
The whole industry, right?
Exactly, because they hold so much Bitcoin, and the reason they get unraveled is because they have so much debt to buy this Bitcoin. But the thing is, this debt isn't maturing until 2028, so it's likely they'll have to sell any of their Bitcoin to meet those obligations just yet.
Yep.
As we said, they're still in the green, so they're still kind of in the clear. And then like a research and brokerage firm, TD Cowen, who are very closely tied to strategy, have basically come out and said they're super bullish on them. They're calling for a $585 stock by the end of 2027, or by 2027, so I guess the end of 2026. Okay. So that's like 170% uplift from here until the end of 2026. So obviously they're very bullish. They don't have any concerns about insolvency or them having to sell Bitcoin.
Okay.
So, I mean, like, at the end of the day, it's all just opinions, right? But these are opinions coming from very strategic and highly paid research firms and analysts. So it's always important to look at.
It is. And that's obviously good for Bitcoin too, because again, if you look into MSTR or strategy and Bitcoin, they're obviously, because one's a reflection of Bitcoin's price, they kind of move in tandem. But
it's leveraged Bitcoin, right? So it kind of, moves more aggressively than Bitcoin, and vice versa in the opposite direction.
Got an ex-personality that goes by the name of Follis. And if you don't, I recommend giving him a follow. But he has a very interesting take that I think kind of is very contrary to a lot of what we've been talking about this whole year. He's talking about institutional adoption being a bad thing. So I'll read out his tweet. So he says here, controversial take. Increased institutional involvement in this cycle doesn't mean that a shallow dip or a soft bear market is guaranteed. In fact, it means it's very unlikely. 2026 could be the biggest unwind this space has ever experienced precisely because of institutions. This cycle was an institution cycle, which sounds bullish on paper, but the reality is that when institutions are forced sellers, once the market goes below a certain threshold, they have clients to protect and risk management rules to follow. They do not hodl, they do not have diamond hands, and they sell directly into cash. So people saying that because of institutions, Bitcoin will never go below 60 or 70K, he's kind of alluding to that it's going to be the opposite. He very much believes that when the time comes, they'll sell, and they'll sell in absolute droves. So I kind of don't mind that view. I don't know how you feel about that.